Yes, Social Security can verify bank accounts in 2026, but if you receive ordinary Social Security retirement benefits, that does not mean the government is scanning your savings account simply because you are a senior. The expanded bank verification rule is about Supplemental Security Income, SSI. And there is another important correction. This is not a brand new August 2026 rule that suddenly applies to every older American. The Social Security Administration says the major 2026 change took effect on May 4th. From that date, financial account verification through a system called AFI became required for all initial SSI claim allowances, including aged, disability, and blindness claims. So, the real question is not, can Social Security look at bank accounts? The real question is, which benefit are you receiving, and which bank account rules apply to that benefit? Today, I will show you 3 things: who is actually affected, what Social Security can verify, and which bank account mistakes can create an SSI problem. Then, I will give you a 5-step 2026 bank account reality check. Start with Robert and Maria. Robert is 72. He receives Social Security retirement benefits based on his work record. Maria is 68. She receives Supplemental Security Income because she has limited income and resources. Both tell their friends, "I get Social Security." But under the bank account rules, those 2 sentences do not mean the same thing. Robert and Maria are hypothetical. The facts in this video come from current Social Security Administration regulations, emergency instructions, and 2026 SSI guidance. Rule number 3. First, identify which benefit you actually receive. This is the distinction most viral videos skip. Social Security retirement benefits are generally based on your covered work and earnings record. SSI is a different program. SSI is needs-based. For SSI, financial resources matter. The Social Security Administration's 2026 guidance says countable resources generally cannot exceed $2,000 for an individual or $3,000 for a couple. Bank accounts are among the resources SSA can consider. That is why financial account verification is directly tied to SSI eligibility. So if Robert receives only ordinary Social Security retirement benefits, the new mandatory AFI verification rule for initial SSI allowances is not a blanket bank balance test on his retirement benefit. Maria is different. Because Maria receives SSI, account ownership and balances can affect eligibility. That is the first question you should answer before you react to any headline. Look at your benefit notice or your My Social Security information. Does it say Social Security Retirement, SSDI, Survivor Benefits, Spousal Benefits, or Supplemental Security Income, SSI? Do not use the phrase Social Security as the answer. Identify the actual program. This is also why age alone does not tell you whether the rule applies. A 75-year-old retirement beneficiary and a 75-year-old SSI recipient can be under very different resource rules. And the recent expansion was not an August 2026 deadline for every senior. SSA's current emergency instruction says that effective May 4th, 2026, AFI verification became required for all initial SSI claim allowances. That includes aged claims. It also includes disability and blindness claims. It includes certain initial claim reopenings and appeal reversals, establishing initial SSI eligibility. Before that expansion, mandatory verification had started with SSI age 65 plus allowances processed on or after August 1st, 2025. That earlier August date may be one reason some online videos are mixing the timeline together. Now, the comment question: which one do you receive? Write retirement, SSI, SSDI, survivor, or not sure in the comments. Knowing the program is step 1. Now we need to understand what the system actually does. Rule number 2. AFI verifies financial accounts. It is not a live camera on every purchase. AFI stands for Access to Financial Institutions. SSA uses it to request and verify financial account information for SSI purposes. Current SSA instructions describe electronic verification of checking and savings accounts as the preferred method. The 2026 expansion says that for all initial SSI allowances processed on or after May 4th, AFI verification is required, regardless of what the claimant says about liquid resources or bank account ownership. That is important. A person cannot simply say, "I do not have much in the bank." The account information can be verified. SSA's instructions also say the request can include alleged financial accounts, a geographic search, and applicable relationship-related searches. The purpose is to verify account balances and identify possible undisclosed accounts that matter for SSI eligibility. But do not turn that into a claim that SSA is watching every cup of coffee you buy in real time. The official materials focus on financial account ownership and balance verification for SSI resource rules. SSA's 2026 financial account guidance says it generally looks at the opening balance of bank accounts as of the first of each month when determining countable resources. That is very different from saying every senior's transactions are continuously monitored. There is also a permission rule. Federal regulations say that to be eligible for SSI, a claimant must give SSA permission to contact financial institutions and request financial records. SSA's own policy explains that this financial permission requirement has existed for years. In fact, SSA says Congress added Financial Account Verification Authority in 1999, and regulations making financial permission an SSI eligibility requirement were issued in 2003. So, this is not a completely new bank surveillance power invented in 2026. What changed recently was how broadly mandatory AFI verification is used for initial SSI allowances. That is the second rule. Old authority. Expanded mandatory verification. Specific SSI context, not every senior. At this point, two myths should be gone. Myth 1. Every Social Security recipient has a new bank account test. No. Myth 2. This suddenly began with an August 2026 deadline. No. The important 2026 expansion date in SSA's current instruction is May 4th. Now comes the part that can actually cost an SSI recipient benefits if the account is misunderstood. Rule number 1. For SSI, the name on the account can matter as much as the balance. Maria has one checking account with $900. No problem so far, but she is also listed on a joint savings account with her adult daughter. Maria says, "That is my daughter's money. My name is only there in case of an emergency." For SSI, that explanation cannot simply be assumed. SSA's 2026 guidance says joint accounts can count differently depending on who is named and who receives SSI. If an SSI recipient has a joint account with someone who does not receive SSI, SSA generally considers all of the money in that account to belong to the SSI recipient, unless the recipient successfully shows otherwise. If the joint account is shared with another SSI recipient, SSA generally assumes equal shares, unless evidence shows a different ownership arrangement. SSA calls the process of showing that some or all of the money is not yours a rebuttal. That makes account titling extremely important. The same SSA guidance says that if you have an individual account, but you are holding money for someone else, SSA may consider all the money in that account to be yours unless the account is properly structured and titled for the other person's funds. This is where ordinary family convenience can become an SSI resource problem. A parent adds your name. A child's money is deposited into your individual account. You hold funds for somebody else. You open or close an account and forget to report it. The intent may be innocent, but SSI looks at ownership and countable resources under program rules. SSA says SSI recipients should report when they open or close accounts, add or remove people from accounts, or when account balances change in a way that affects resources. Remember the central limit, $2,000 in countable resources for an individual. $3,000 for a couple. Not everything you own counts. For example, SSA generally excludes the home you live in, one vehicle used for transportation, household goods, and certain other resources. So, do not panic because your total net worth exceeds $2,000. The issue is countable SSI resources. That distinction matters. The 5-step 2026 bank account reality. Check if you receive SSI or help someone who does use these 5 steps. Step 1. Identify the benefit. Do not write Social Security. Write the exact benefit: retirement, SSDI, survivor, spousal, or SSI. If it is not SSI, do not automatically assume the SSI AFI resource rules apply to your benefit. Step 2. List every account with your name on it checking: savings, credit union accounts, certificates of deposit, money market accounts, and joint accounts. SSA says SSI recipients must report bank accounts on which their name appears. Step 3. Check who really owns the money for every joint account. Ask why your name is there. Is the money yours? Someone else's? Mixed? If you believe funds in a joint account do not belong to you, do not simply ignore the account. Ask SSA what evidence is required to rebut the ownership assumption. Step 4. Compare countable resources with the SSI limit. For 2026, SSA still lists the general resource limit as $2,000 for an individual and $3,000 for a couple. Do not count excluded property by guessing. Use SSA's current resource rules or ask SSA how a specific asset is treated. Step 5. Report changes and keep proof. If you open or close an account, add or remove a joint owner, or experience a resource change that needs to be reported, do it promptly. Keep statements. Keep account title records. Keep copies of what you reported. And if SSA sends a notice about an account you do not recognize or money you believe is not yours, respond, rather than assuming the system will fix itself. The scam warning. There is one more reason this topic matters. Scammers can take a real government policy and add a fake deadline. They can say, your Social Security will stop unless you verify your bank account today, or give us your routing number before August. Do not give banking credentials to someone simply because they mention AFI, SSI, or a 2026 rule. Use official Social Security contact channels. A real verification policy does not make every urgent phone call real. What Robert and Maria finally understood. Robert did not need to panic. His ordinary Social Security retirement benefit was not suddenly subject to the SSI resource limit because of a viral headline. Maria did need to pay attention. She received SSI. Her bank account ownership, joint accounts, and countable resources were relevant. And if she were receiving an initial SSI allowance processed under the expanded 2026 policy, AFI verification would be required. The difference was not age. The difference was the program. That is the sentence to remember. Social Security can verify bank accounts in 2026, but not every senior is under the same bank account rule. Before you move money, remove your name from an account, or panic over a headline. Verify which benefit you receive and which rule actually applies. Subscribe to Grant Wexford for clear, research-based guidance on Social Security, retirement banking, Medicare, beneficiaries, and estate planning. And next, watch. Social Security warning: don't change banks before your next payment. That video explains a completely different banking issue, how changing direct deposit information can affect the payment process. One headline says, they are checking bank accounts. The useful question is, whose account, under which program, and for what purpose? This video provides general educational information and is not individualized legal, financial, banking, or benefits advice. SSI eligibility depends on income, resources, ownership, exclusions, living arrangements, and individual circumstances. Always verify your situation directly with the Social Security Administration before changing account ownership or moving money solely to affect benefit eligibility.